Hello everyone, it is Alliance again. As I told you, I do make these very educational videos on a weekly basis, and I'm back today with another video. And in today's video, I want us to dive deep into market structure, specifically major and minor structures. Many traders, they lose to the market due to less knowledge on how minor structures are formed within major structures, or basically how there are mini trends within a bigger and larger trend. And this very video is going to be a continuation on the last video about structure that I did. If you're jumping on this very video, I would recommend you to first go and watch the previous video so that we be on same page. The video link is just going to drop in the right corner of this video, so make sure to go and first watch, then come back. So without further delay, let's break everything down step by step. Okay, so what is market structure? As I told you last time, market structure is simply the language of price. The way how I'm able to talk to you, price is also able to talk to us by moving in a structural form. So price is either moving upside. Those structures, they are either moving upside, downside, or just ranging in one place. Of course, when the price is moving upside, that's an uptrend or a bullish market, meaning the buyers are more stronger than the sellers in that current market. And of course, when they are moving down, the sellers are much more stronger than buyers at that very moment. And when it is ranging or consolidating, just know the amount of buyers and sellers present at that very moment are equal, meaning the energy is same. No one is dominating the other. But these very structures, they are of two types. There is a major structure, or which is the external structure, and there the minor structure, which is the internal structure. So this structure, the major one, is always found on a higher time frame, or we can call it a daily, 4 hour, or even a weekly time frame. And these minor structures or internal structures, they are usually found on lower time frames, which is 15 minutes, 5 minutes, 1 minute, all those lower time frames. So as I indicated right here, I'm going to be using a blue color for the major structure. So this structure you're seeing here, this is my major structure, or the higher time frame structure, and this black structure within it is going to be my minor structure, or the lower time frame structure. So this very major structure, it is usually the overall direction of the market, and it is highly respected by institutions. Whereas this minor structure, it is just, I would say it is just used for refinements, for getting precise entries. What do I mean? So this very major structure, or a higher time frame structure, it is just used to give us a bias. So we need to know where we are trending. Today, are we trending up? Are we going to be looking for buys or sells? So when this higher time frame structure or major structure, when it gives us a move, an impulsive move, just like this, hold on a second. All right, when it gives us this impulsive move, this is a higher time frame structure, of course. A lower time frame structure or a minor structure, it is going to be a very, very strong uptrend, meaning it is going to be giving us series of higher highs and higher lows. So it is going to be a very strong trend on the lower time frames. So what does this mean? This simply means that this higher time frame tends to last longer. I don't know if you're getting the point. So if we get this move to the upside on the lower time frame, it is going to be a very much trend. So when we get a shift on the lower time frame like this, when we get a shift like this, what does this mean? It simply means that the higher time frame or the major structure is coming in for a pullback or a correctional move. So once we get this very move just like this, just like this, what does this mean? As I've said, it is the higher time frame that is coming in for a pullback, as simple as this. So where does this magic happens? I want to let you know that it is always advisable to trade impulsive move instead of trading the correctional move or the pullbacks. Why is it so? When people are trading correctional moves or pullbacks, they tend on ignoring the higher time frame bias. So meaning, if you are not careful enough, you're going to be always getting stopped out because you are trading against the higher time frame trend or the major structure. So if of course you're trading a counter trade or a major a pullback or a correctional move, it is always advisable to know your targets, because this very low right here, it is never going to be broken. This is a swing point on a higher time frame, meaning since the market is trending to the upside, this swing low will always be protected. So when you're trading a counter trade or a correctional move, make sure you know where your targets are. Target the nearest POI where the market is likely to go into reversal. I mean the lower time frame is likely going to reversal. So I recommend you always stick to the dominating side, which is a buy side. You're either trading a impulsive move like this. When the pullback comes in, you hold on, you wait for the alignment. Now the magic comes in when the lower time frame again shifts. So when there's a shift in structure like this, just like this, what does this mean? So this simply means that the lower time frame is aligning with the higher time frame, meaning this pullback is coming to an end. The higher time frame is ready to put in the impulsive move, and once this aligns, now this is where we get A+ setups or higher probability setups, because the higher time frame is bullish. It is continuously breaking structures to the upside, and now the lower time frame also is switching to bullishness. So this is where we get higher probability setups. So when you notice this shift in the market structure on the lower time frame, of course this very shift has to happen within a point of interest, meaning this pullback has to come in a higher time frame point of interest. It might be an order block, it might be a breaker block, it might be a fair value gap, depending on what you use as your point of interest. So when we get a shift like this is a very nice A+ setup. You get a shift as usual, then you mark your lower time frame point of interest, because it is going to be your entry. So you're going to position yourself like this. This is a very higher probability setup, as simple as this. You're going to place your stop loss on a validation point, on a protected lower time frame swing, because we have already got a shift. So once the price, you just have to wait for the price to pull back just like this, then you can enter while targeting either the higher time frame swing high, the higher time frame higher high if you are a swing trader, or if you are a day trader, you can simply target the lower time frame recent higher high just like this. And another thing I want to clarify, when you get a market structure shift, or a change of character on a higher time frame just like this, hold on, sorry about that. So just like this, so this is an uptrend on lower time frame, of course, as we all know, just like this. So when we get a shift, this is a correctional move on a higher time frame, as I've said, and then we come further lower just like this. So once we get an alignment of a higher time frame and a lower time frame just like this, so this is a pullback, a higher time frame pullback like this. So once we get the alignment between lower time frame and a higher time frame, of course that's now a probability setup so you're going to be having. But what I want you to know, this move from here up to here, so this very move from here up to here, so in order for the new higher high to be printed in the market or to be made, this recent higher high right here, this recent higher high, it is going to be broken within few days. It's not going to be broken within one day, or it might even take a week. Meaning what? Meaning here, after the market structure shift, now you are having a directional bias, meaning every time you wake up, you will just be looking to get a continuation entries only, meaning it will just going to be a pullback, then you look for entry, then you continue with the trend to the upside, because now this higher low right here, its work is to give us a new higher high, meaning the target is this higher high right here. So always when you wake up and this higher high is not yet broken, or we haven't gotten a new break of structure to the upside, always look for a continuation. So meaning on the first day you get your entry here, you get your entry right here, just right here, your stop loss is here. This is the first day. So we get a lower time frame break of structure right here, Then when we get a lower time frame break of structure, you wait for a pullback into a lower time frame point of interest. So if you're having a point of interest here, just right here, you wait there, price comes back in, you take another entry on the second day, just here, just here. So even on the next day, if this higher high hasn't been broken, or if you haven't gotten a new break of structure, what you do, you just again wait for a pullback. You just wait for a pullback into a lower time frame point of interest. Might be an order block, might be a breaker block, might be an imbalance. Then you do what? Then you take another buy right there. Then you take another buy right there until this recent higher time frame higher high has been broken. I think I'm very loud and clear. So once we get a higher time frame break of structure, or if we get a break of structure on a major structure just like this, just know now the move is, this impulsive move is coming to an end. So now what we do, just know that the market eventually, soon or later, is just going to come and print a pullback. So just like that, like that, like that. Make sure when you're trading, you are always aligned with a higher time frame bias. As simple as that. So I'm very sure this very video is being very helpful. So make sure you click that like button so that YouTube can recommend this video to other traders, and I myself, I'll get motivated to bring these very videos in time. So that's it, guys. Always remember to align yourself with the higher time frame for A+ setups or higher probability setups. So when it comes to the bearish market or the downtrending market, it is the same story. You just it is just like this. This is an impulsive sell to the upside. On the lower time frame, of course, it is going to look like this. It is going to be a mini trend like this. It is going to be a mini trend like this, something like that. So when we get a shift, of course, when we get a shift, now the higher time frame is coming in for a pullback, since we are in a selling market or a bearish market. So it is coming in for a pullback, as simple as this. So what you do, you wait for the higher time frame and the lower time frame to align. So once we get a lower time frame market structure shift, just like this, now that's our entry signal. So this is, of course, let me put it very well, this is a higher time frame move, and of course this is going to be a pullback. So what you do after a lower time frame market structure shift or a change of character happens, meaning now the higher time frame is coming to an agreement with the lower time frame, meaning it is ready to reverse and come put in a new lower low, since the market is coming to the downside. So this is your confirmation. Now you get this very good higher probability setup. So you wait for the sorry about that. You mark your lower time frame point of interest. Might be an order block, as I'm saying, a breaker block or an imbalance. It is up to you. Now you wait, you put your short position there. Just a second. There. And the stop loss, of course, it is going to be just up there. So once you identify your lower time frame point of interest, you just wait for the price to come and tag you in, as simple as this. Then here a lower time frame is well aligned with the higher time frame, meaning now your setup is a higher probability setup, meaning it is just going to tag you in, then go ahead and of course break structures to the downside, putting in a higher time frame impulsive move. As simple as that. So I'm very sure this is very understood. Let's give a very small live chart example, and then we call it a day. So this is GJ, this is GJ. All right, this is GJ on 4 hours. So this is our higher time frame market structure, or we can call it a major structure. So there is a higher high here. Let me put an demonstrator right here. So there is a higher high right here, there is a higher low, there is a break of structure, meaning this is a break of structure right here. Let me put that in red, and I reduce the. All right, so there's a break of structure here. Now when the major structure gives a break of structure, it is coming for a pullback. And where is it pulling back to? There's a point of interest here, just right here. So I'm going to mark them, then we jump on a lower time frame. We see how a lower time frame aligns with the higher time frame. So now this is our low here. Then there is another break of structure to give us a new higher high. Another break of structure is put into the market here. Then there is a retracement or a pullback into this very point of interest here. Then there is another higher high right here. There's another break of structure right here, and a pullback into this very beautiful fair value gap right here. And from there, of course, our higher high is this one. The swing point is this one right here. So this one doesn't get broken. It doesn't get broken until here. That's why I marked these swing points in the red color, because they are internal structures. So everything within this swing high and this swing low and this swing high is just internal structure. It is just internal structure, unless this is either broken to the upside or downside. So this is where the market broke to the upside, and that's why it is marked as a swing high. So let's go to the lower time frames, and we see how a lower time frame and a higher time frame comes to alignment once it taps in this higher time frame point of interest. or simply when a correctional move or a pullback is coming to an end. Let's jump into a lower time frame. I'll be using 45 minutes for a better quality of the video. If I go very lower time frames, of course, you know, the quality is going to reduce. Just a second. Alright, these are the point. Let's go to where we started. Alright, so let me zoom in. I want us to see what happens. Alright, this is where we started. I want us to check this. So this is a higher low, this is a higher high, this is a higher low. So there's a break of structure here. So what happens to this break of structure? The market broke to the upside, then pulled back. When it pulled back, I want us to see this. When it pulled back, it came into this point of interest. And what happened? When it got in this point of interest, it shifted. I'm very sure you can see this shift right here. It is a very tiny shift right here. It is not obvious on 45 minutes, but if you go to 50 minutes, it will be. And I can't go there because of the quality of the video. So there was a shift, and there is this small entry right here. So this was supposed to be your entry. This was supposed to be your entry. Then this is where the market, the lower time frame and the higher time frame aligned. This was supposed to be your entry. Then you target this higher time frame swing high or higher high. So just here, then we got another break of structure here, meaning this is our swing low right here. So the market came and retraced or made a pullback. Watch clearly what happened here. So when it came for a pullback, it came in this high time frame point of interest, which is a demand, our demand zone. Anyway, a quick reminder, in the next video I'll be doing demand and supply zone, how to trade structure with demand and supply zones. So if you're interested in that, make sure you wait for a very brand new video that it is coming your way. So this very demand zone, what happened? It is a higher time frame. It is a higher time frame point of interest. So the market did what? I want you to see this very clearly. The lower time frame switched or changed character right here. What does this mean? It means now, since the higher time frame is pulling back and it touched into a higher time frame point of interest, then the lower time frame, once it changes character, you just have to know that this is the signal that now the higher time frame is coming in for a what? For an impulsive move, or a move to go and give us a new break of structure to the upside, since it is the current trending market. So we get a shift here, and what happened? Market structure shift right here. Then there was this point of interest, which is here. The market came and of course tagged you in. If you entered from here, you can see very well. As simple as that. Sorry about that. As simple as that. Then you get your entry. Then of course now you have your target as this new on this targeted higher high. You know, we are printing higher highs since it is an uptrending market, meaning this very swing low, it is going to be targeting this swing high for a new higher high. So as simple as that. When it continues a break of structure here, of course, then what do we see? We see a pullback into this very higher time frame point of interest that we marked. So what happened when market got there? Watch this very close. It shifted, of course. This is a shift. It shifted from here, you can see. Then it came back and it tapped into this beautiful fair value gap, and it did what? Of course, it bought. Now the lower time frame has agreed with the higher time frame that the pullback is over. Now it is going for an impulsive move, or it is going to put in a new break of structure to the upside. As simple as this. So like that, even a very quick example on a downtrending market. I don't want to keep this video very long. Let's see Euro USD. Euro USD. I don't want to make this video very long. I just want it to be very detailed as it is. You can see. Alright, what do we see? Let me find something. Okay, here we go. I'll first go to 4H, of course. We see. Alright, so this is 4 hours on Euro USD, a higher time frame, what we use for our external structure or a major structure. So what do we see? We see a lower low, a lower high, a lower low, a lower high. So this is a break of structure right here, a major break of structure right here. You can see it. So the market pulled back into this point of interest. We are going to see what happened when it got in this point of interest right here. So after getting in this point of interest, it came here to put in a new break of structure right here. Let me zoom in a bit. So I'm very sure you can see this. This is a lower low, a lower high. After there, it got this. It is also this point of interest here. We are going to see what happened there. So a break of structure there. Okay, let's just go straight to the lower time frames. We see what happened. I don't want to keep this video very long. Alright. Okay, here we go. Let me zoom in a bit. So sorry about